Have you ever imagined waking up in the morning knowing that your money is working for you, even while you're still half asleep? Imagine checking your phone and seeing fresh cash quietly added to your account, not because you worked extra hours, but because your investments just paid you. It sounds like a fantasy, doesn't it? But what if I told you that it's not only possible, it's actually one of the fastest paths to financial freedom you can take? This isn't a dream. It's a very real strategy that thousands of people are already using to live off dividends. And today you're going to see exactly how you could earn around $2,900 per month just from your investments. Now, $2,900 a month may not sound like $1 million lifestyle, but imagine what that means in real life. That's enough to cover rent or a mortgage in many places, pay your bills, buy food, and still have money left to enjoy life, all without touching the money you originally invested. Think of it as having a money tree that keeps giving you fruit every single month while the tree itself keeps growing. And the best part, you don't need to be rich to start growing it. You just need to understand how dividends work and how to use them smartly. So, what exactly are dividends? Let's break it down in the simplest way possible. When you buy a stock, you're not just pressing a button on your phone. You're actually becoming a small owner of that company. That means when the company makes money, you get to share a bit of the profit. Some companies decide to give part of that profit back to their shareholders, usually in cash. That cash is called a dividend. It's like a thank you payment for believing in the business. You can take that money and spend it, or you can reinvest it to buy more shares, which then pays you even more next time. It's a snowball that keeps getting bigger and faster as time goes on. Most companies pay dividends every 3 months, though some pay every month. The important thing is that dividends can give you a regular income, like a paycheck, but one that doesn't require you to clock in. If you can build a portfolio that pays you $2,900 a month in dividends, that's about $35,000 a year. And the most exciting part is that this isn't some fantasy number. It's absolutely possible with the right plan. Before we dive into the fastest ways to reach that goal, there's one more key term you need to know: dividend yield. It sounds complicated, but it's really simple. The dividend yield tells you how much a company pays you compared to its stock price. For example, if you buy a stock for $100 and it pays $10 per year in dividends, that's a 10% dividend yield. The higher the yield, the more income you earn from each dollar invested. But remember, higher yield doesn't always mean better. Sometimes a company pays a high dividend because its stock price has fallen, or because it's taking more risk. The trick is to find investments that offer a strong yield without too much danger. And that's exactly what we're about to do. Let's take a look at 3 powerful strategies that can help you reach that magic number, $2,900 a month, as fast as possible. You'll see how each one works, how much you'd need to invest, and which might fit you best depending on how much risk you're willing to take. Ready? Let's start with the first one. One of the quickest routes to living off dividends. The first strategy is something many people have never even heard of: covered call ETFs. Now, don't let that name scare you. It's easier than it sounds. An ETF is just a collection of many different stocks, all bundled together so you don't have to pick individual companies yourself. A covered call ETF takes it one step further. It not only owns stocks that pay dividends, but it also earns extra income by selling call options. Basically, contracts that allow others to buy those stocks at a certain price. When these ETFs sell those options, they collect small payments called premiums. And those premiums are added to the dividends and paid out to investors. That's why covered call ETFs often have very high yields, sometimes even in the double digits. For example, some of the most popular covered call ETFs, like XYLD, OILK, or EWZ, have yields around 11% or more. That means if you invested around $300,000 in them, you could already be earning close to $35,000 a year, or $2,900 a month, in passive income. To put that in perspective, if you tried to get the same $35,000 from regular dividend stocks that yield around 3%, you'd need almost $2 million invested. So, covered call ETFs are a much faster and more efficient way to reach your goal. Of course, there's always a trade-off. Covered call ETFs might not grow as much in value over time because the call options can limit how high the stock prices go. But for someone who wants income right now rather than decades from now, this strategy is gold. Imagine Alex, a regular investor who wants to quit his job and live off dividends. If Alex invests about $300,000 into a few solid covered call ETFs, he could be pulling in nearly $2,900 a month. That's enough to cover living expenses, all while keeping his original investment intact. Not bad for letting his money do the work, right? Now let's move on to the second strategy, one that's been creating wealth quietly for decades: REITs, or real estate investment trusts. Think of REITs as companies that own buildings, shopping centres, apartments, warehouses, hospitals and offices. They collect rent from tenants, and by law, they have to pay out at least 90% of their profits to shareholders in the form of dividends. That means they're basically built to pay you. It's like owning a piece of real estate empire without ever having to deal with leaky roofs or broken toilets. Some REITs pay incredibly high yields. For instance, Two Harbors Investment Corp pays around 20%, Brandywine Realty Trust about 19%, and Orchid Island Capital roughly 19% as well. Now these numbers change over time, but the point is that REITs can offer far higher income than regular stocks. Historically, REITs have averaged about 10.8% annual returns over the long run, which includes both growth and dividends. So let's say Alex decides to go the REIT route. To make $35,000 a year from REITs with an average return around 10.8%, he'd need to invest roughly $320,000. That's still a lot of money, but compared to the millions you'd need with traditional dividend stocks, it's far more achievable. And the best part, many REITs pay monthly instead of quarterly, giving Alex a consistent paycheck-like income. That means real estate income without the headaches of being a landlord. Of course, just like with covered call ETFs, there are some risks. When the economy slows down, property values and rents can drop, and so can dividends. But if you spread your money across several REITs, maybe a few that focus on apartments, some on warehouses, and others on data centers, you can build a solid, balanced source of income. With patience and consistency, someone like Alex could reach financial independence in about 5 to 7 years, depending on how much he saves and reinvests. The idea is simple: keep reinvesting the dividends, let the compounding work its magic, and before long, the snowball becomes unstoppable. Now for the third strategy, one of the most reliable, time-tested approaches to building a dividend-based life. These are the dividend aristocrats. The name alone sounds impressive, and for good reason. Dividend aristocrats are a group of large, well-established companies that have raised their dividend payments every single year for at least 25 years in a row. Think about that. No matter what the economy did, no matter what crises hit the world, these companies kept rewarding their investors with more money every year. That level of consistency is rare and powerful. Some examples of dividend aristocrats are 3M, Leggett & Platt, and Walgreens Boots Alliance. These companies usually pay lower yields, around 7% on average, but they make up for it with reliability. They don't just pay dividends, they grow them. It's the difference between getting a paycheck that stays the same forever and one that gives you a raise every single year. Let's see how this works in practice. If Alex wanted to earn $35,000 a year from dividend aristocrats at an average yield of 7%, he'd need to invest around $500,000. Yes, that's a larger starting amount compared to the other strategies, but what you get in return is peace of mind. These are companies that have been through wars, recessions, pandemics, and market crashes, and still managed to increase their dividends. For someone looking for long-term security and growth, dividend aristocrats are like the sturdy backbone of a dividend portfolio. And there's another advantage. Because these companies are so stable, their stock prices tend to fall less during market downturns. That means your investments not only generate income, but also hold their value better during tough times. A smart investor might combine this strategy with the others, using high-yield covered call ETFs, or REITs for immediate income, and dividend aristocrats for long-term stability and growth. It's like building a table with 3 strong legs. Together they support your entire financial future. So let's recap everything simply. You want to live off dividends, about $2,900 a month, or $35,000 a year. You could reach that goal in 3 main ways. First, covered call ETFs, fast income, high yields, and less money needed up front. Second, REITs, steady monthly payouts, and the feeling of owning real estate without the stress. And third, dividend aristocrats. Slower but ultra-reliable income that keeps growing year after year. Depending on your situation, you might mix all three and create your own personalized path to freedom. Now let's talk mindset. Because the truth is, this isn't just about money, it's about lifestyle. Living off dividends isn't about being rich, it's about being free. It's about having time to do what you want, when you want, without constantly worrying about bills or a boss or the next paycheck. It's about peace. And the best part is that anyone, yes, anyone, can start. You don't need to be a financial expert or a millionaire. You just need to start small, stay consistent, and reinvest those dividends until the snowball takes over. So here's the final question. How long are you willing to keep trading your time for money before letting your money work for you? Because the fastest way to live off dividends starts the moment you take that first step. Whether it's buying your first covered call ETF, your first REIT, or your first dividend aristocrat, that single decision can completely change your life over the next few years. Imagine yourself 5 years from now, waking up, checking your account, and seeing another $2,900 that arrived while you were asleep. No alarms, no stress, just freedom. That's the life you can build, one dividend at a time. Smash that subscribe button, leave a comment, and see you soon. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.